Hi guys, welcome to Watch Your Crypto. I am Alan Chang. Let's get started. In this episode, we'll cover the Curve DAO token CRV explained, Optimism token loss, research of the Bitcoin as a legal currency, what's going on with TRON USDD, also the latest news in the market movement. If you like my video, please don't forget to push the subscribe and like button below. I really appreciate it. As I mentioned before, DAO decentralized autonomous organization are a blockchain-based collective that votes on decisions. What happened is Optimism created OP as a governance token for its DAO, and hired market maker Wintermute to more efficiently distribute the 20 million OP tokens in an airdrop to Optimism's collective stakeholders to continue its launch. Then Optimism sent out 2 such transactions to Wintermute before sending over 20 million OP tokens, and both transactions were confirmed by Wintermute. Optimism then sent the tokens over, then Wintermute discovered that they were now inaccessible. Why did this happen? Because Optimism is a layer 2 scaling solution built on top of the Ethereum network. Second layer solution permits faster transactions as they bypass the off-congested Ethereum network, but everything has a price, right? Which also brings greater risk at the same time. The 20 million tokens were sent to Wintermute's Ethereum layer 1 address, but due to the address has not been deployed or synced to the Optimism layer 2 address, the whole fund was left floating and accessible on layer 1. So that's why Optimism lost 20 million tokens after layer 1 and layer 2 confusion was exploited. The stolen token were valued at $35 million US at the time of the hack. Wintermute took full responsibility for the error when it was discovered. From my perspective, I think advancing the whole progress is a good thing, but sometimes we need to be able to walk steadily before we try to run. The University Jose Simeon Cañas recently came out with a research focusing on how the citizen in El Salvador thinks after legislation of Bitcoin. The result shows most of the citizens in El Salvador thinks listing Bitcoin as a legal currency has not changed their personal economic situation. FYI, the sample size is based on 1,272 citizens. The result shows only around 6% of people thinks Bitcoin actually brought benefits to them, and over 70% thinks Bitcoin didn't bring any benefits. I personally just think this legal action hasn't passed that long, and the citizen will still have to be educated about Bitcoin. Also, this always takes time for people to accept anything new. After the founder of TRON, Justin Sun, activated a plan of USDD, the 30% APY highly boosted TRON's TVL. Now it's just behind Ethereum and the BNB chain. He also announced that the USDD collateral ratio is over 200%. Also set it a basic risk-free interest rate at a 30% per annum. Right after USDD official announced a 200% collateral, a Twitter member Rez pointed out that it's a mistaken calculation. There's only half of the actual collateral revealed. According to USDD Medium, the USDD collateral rate formula is the Bitcoin, USDD, and TRX reserve plus the TRX burnt in the past, divided by the circulated USDD. Based on this formula, the collateral rate is 202.22%. But Rest mentioned the burnt USDD and the TRX should not be listed as collaterals. The USDD official does not have any explanation why is it calculated that way. Also counting the reserve TRX from TRON and DAO is walking through the same route as Luna and UST. Then Rest calculated the collaterals by removing the burnt TRX and removing the burnt TRX plus the TRX reserve in TRON DAO. The result came out as a 102.5% and 80% collateral rate. Even it's over 100% for the first solution, but 80% of it is a highly volatile asset. If the market drops down, it will be easy for it to fall under 100%. And how long can USDD pay out 30% APY is still a challenge. Personally, I agree with the point of Rez has. The official is just trying to make all the numbers sensational to catch the investors' eyes. Now let's get into Curve DAO token CRV. Curve DAO was founded and launched in the year 2020. It is one of the latest projects in the sector of decentralized finance, developed and created by Russian scientist Mikhail Igorov. There are currently 501.7 million circulating supply and a market cap of 17.2 billion. CRV is an Ethereum token that powers CurveFi, which is a decentralized exchange and automated market maker protocol. This protocol is made to easily swap between similar ERC20 tokens, which are the primarily stablecoins and Ethereum-based Bitcoin tokens. Curve offers low slippage rate and low fees for exchanging tokens, such as a decentralized exchange that connects users to exchange with the best rate. Instead of relying on the order book, Curve forms a liquidity pool based on smart contract that works on automatic market maker. The Curve DAO token derives value from its technology, technical capacity, use cases, and a mainstream use. The overall functionality and the utility are the provide of the Curve DAO token with a real-life value. So the factor of the upgrades, updates, development, and users can highly affect the value of CRV. Now let's get to the technical analysis for Curve CRV. This is a daily candlestick chart for CRV. As we can see, CRV is also going through a consolidation and dropped 85% to the lowest point. According to a recent long-term forecast, the price of CRV will reach $12 by the end of year 2022 and rising to $22 by the end of the year 2023, $35 by the end of the year 2025. Then Curve CRV will then rise to $50 in the year 2027 and $75 in year 2030, which is a token with potential, but the value of CRV is technology based, so there are a lot of variables during the upgrades, updates, and development, and etc. In another word, there are more risks, but of course the risk reward will also be eye-catching. Now will actually be a good timing to enter since it's a really low point. Diversify the risk and hold it for at least until the end of the year 2022 to observe. If it does well and meet our expectation, we can always raise our investment in the future. This is the hourly candlestick chart of Bitcoin. We can see that Bitcoin actually broke the red pressure zone, which is a long signal, and it's currently facing a short-term pressure. But this wedge should create a solid momentum for a rebound. If it breaks the blue pressure zone, it will be a good opportunity to long it. Then we can take profit around 30,780 to 30,800 and set a stop loss at the green support zone around 30,225 to 30,250. Here's the hourly candlestick chart for Ethereum. As we can see, Ethereum is having a similar pattern as Bitcoin, but the difference is it's still in the wedge. Now it's time to observe if the candlestick breaks the red pressure zone or the green support zone since it's narrowing. Then we can use the same strategy to take profit and stop loss. But this time if we long it, we can set the take profit a bit below the previous high, and stop loss if it falls back and breaks the red pressure zone. If it breaks the green support zone instead, it'll be the other way around. Overall, the crypto market is still going through consolidation due to a market clarity. For short-term traders, trading between an interval is preferred. For potential altcoin holders, always remember risk diversification. We can scout through different projects and pitch in a small amount of each one. Never put all your eggs in the same basket. If you like my video, please don't forget to push the subscribe and like button below. Thank you for watching Watch Out Crypto. I am Alan Chang. I'll see you next time.